Hello, it is Wednesday the 12th of April. It's US CPI day and a whole lot of other data too. We've got Fed minutes, US budget, mortgage application data. So there's a whole bunch of news out there today, but by far the most important is CPI, which is the US inflation data from March. Economists are expecting a year-on-year headline rate of 5.1%, and that would be the slowest pace since May of 11 months ago. However, Goldman Sachs' John Flood came out today and said that if that figure prints above last month's reading of 6%, in other words 6% or more, that they expect the S&P to drop at least 2%, which I kind of agree with. So let's see. If we get it in line with 5.1%, there's a very mixed messages coming from the Fed at the moment, and the minutes might make it clearer. Half of them are kind of pushing to get more aggressive, to get ahead of inflation, and the other half are kind of pushing to be patient and wait and see how what they've done already is going to affect the market. So that's what we're looking forward to. And remember, the expected year-on-year headline rate is expected to be 5.1%. And if we look at core CPI, that's expected to be month-on-month 0.4 down from 0.5. Month-on-month, it's expected to be 0.2 down from 0.4. So we've also got Bank of Canada. So an hour before the US Open is the CPI data, and then half an hour before the US Open, Governor Bailey, and then half an hour after the US Open, we've got the Bank of Canada monetary policy rate. Now, they paused in January, and I expect them to continue to pause. The market is expecting them to do nothing. It would be a massive surprise and move the Canadian dollar if they did something. Okay, so first off, let's talk about where we are. This is the S&P. Monthly chart from this high to this low, this level that we're stuck underneath. Haven't been able to close the month above for, since January of June of 2022, is this 50% pivot level at 41.49. So 41.49 is our key overhead resistance, has been for months and months and months, 10 months, and here we are underneath it, testing it again on the weekly. Last week was a doji underneath this level. Today on the daily, we are a couple of days now of dojis underneath this level, 41.49.75. That was yesterday's high, and that's resistance. I would not be surprised if we see another leg lower from here. My main reason for thinking that is I think we've made an ABC correction from this low to so from the low that we made on the 6th of April, projected from the low that we made on the 10th of April. This is an ABC measured move, and the market's looking at the same, because when you do that, the 61.8 becomes support, and that's exactly what we saw yesterday. So 41.49 is our resistance, 41.29 is our support, and a break outside of those ranges following those CPIs will mean a bigger leg lower. So 41.29 is the key level we're watching. Now, if we do another leg lower without any drama, then you can see the ABC, two support levels we are headed to below 41.29. First, that would mean underneath these 4-hour moving averages, first target would be 41.05. Second target would be 4,076. Now, that's not as much as Goldman Sachs say we would fall if we had a strong print above 6. Maybe we end up somewhere in the middle, like 5.7, and that would really confuse the market. Then it's really going to be all about the Fed minutes and trying to divine the tea leaves from that about what the Fed are going to do next. And at the moment, it's really confusing messages, trying to divine what they're going to do. I really do think the safest way is to stick to the technicals and say, right, if here, here. For example, for me, if we can push above 41.49 by the end of today, then we have a really clear target at this 786 up here at 45.23. And, 400 points almost on the upside if we can do that. So that's where we are. Remember, in the seasonality for the S&P, or particularly the NASDAQ, there quite often is a dip in April with earnings, and then May, June are the really, really strong months higher. So I wouldn't, I think a dip here doesn't stop me being bullish longer term. It really doesn't. It's just a pullback. And all of these moves, look quite corrective so far. So that's where we are short-term levels with the S&P today. Ones to watch. If we take a look at the NASDAQ, we're a little bit more bearish here, but we've got the same pattern. ABC equal measured move. We're underneath the 61.8 and headed lower. Now this picture could change completely, couldn't it? With a massive doji by the end of today. But for now, this is pointing to lower. We've done that 61.8 all the way down, tried to bounce. I wouldn't be surprised to see another swing higher in a sideways range if we get a nice weak lower inflation print. But otherwise, I'm afraid I think we've had one swing lower, ABC correction, and we're going to see another swing lower. So if I measure from this high to this low, project it from here. First target on the downside here in the NASDAQ is a retest to the lows and 12,964. And if we do the equal measured move, 12,800 or lower, we will have, I think if we go beyond this equal measured move, we can argue that we've dropped out of this channel that we're in. I'm going to draw it like this. Here's our channel. Collect the lows to the highs. So you can see this equal measured move would put us at the bottom of a parallel channel and quite a nice place to buy, 12,800. It's not weird on a day like today to see the market go one direction after CPI and then completely reverse after the Fed minutes. In fact, you'd be surprised how many times the market does reverse at the Fed minutes. So the Fed minutes, of course, are at 7:30 p.m. UK time. And they are, 7 p.m. UK time, which is 2 p.m. in New York and 11 a.m. in California. So that's what I'm looking for in the NASDAQ. How are we doing in the DAX with our little correction? Because this is by far the most bullish stock index at the moment. Remember, we pushed above our equal measured move and our 886 fib level yesterday in the DAX, and we're just going sideways above it at the moment, trading very quietly. It's looking a little bit double toppy to me. It looks like a topping pattern. So if that's the case here, if we were to go back underneath 15,805 in the DAX after this data, I think that we could make an argument this is a double top. We retest these lows and potentially I'd be looking then for 15,481. And that would confirm this as a correction, unfortunately, this rally. Obviously, if we blast higher, I'm looking for 16,000 and maybe 16,300 on the upside. But for me, it's not clear yet. Like here, this was a pretty clear, you can see three-wave correction. This correction that we're doing in the DAX on the 4-hour here, it's not clear yet that this looks like three waves. So this does point to, another swing lower at least before we go higher, and potentially a wave 4 kind of triangle even before we go higher in the DAX. Let's take a look at a couple of the other indexes. We will take a look at the TSX, Toronto Stock Exchange, which since it cleared that 20,000 level is having a ripper, and quite excitingly, fifth wave up. Right, 1, 2, 3, 4. We just made a new high, which confirms this as a 5-wave move, and this confirms this to me as a 3-wave correction. Now, it's not clear. It's not clear. Even if it's in an uptrend, if all the other stock indexes are falling or having a correction, the TSX usually will. It'll just be a pullback in an uptrend rather than anything else. But there's loads to like about this. Above the daily 50 moving average usually points to quite a strong impulsive move. And, you know, as I said before, I think this is up 3-wave correction, sort of sideways running flat correction. And I'm looking on the upside, so we're buying pullbacks. It's just that once we complete our 5 waves up, I think we've got room to go a little bit higher before that happens. 20,555. We are likely to see a 3-wave correction back to the bottom of this wave 4. So keep going until it keeps going. But if we look lower time frame, we need to be watching out for when we make 5 waves in this last 5-wave move, if you like. That's really hard to count. 1. I do think we've got another swing higher to come in this TSX. It's certainly not, and 20,555 would be where I'd be looking for. It's certainly not as bearish as some of the others. Let's take a quick peek at the ASX. Australian, see where we are with this. Really bullish, gapped higher after the big move and above the daily. Look at this one. This is above the daily 50 moving average. It was resistance in February. The problem with this one, just like the TSX that we've just looked at, is it looks like 5 waves up. Now these fib levels are being respected. So above this 61.8, I would expect this to be support. But we've got a slight problem here in those previous highs, haven't we? So we're looking a little bit toppy here. It wouldn't be crazy for this ASX, if everything else has a pullback, to come back and test this 72.99 level before going higher. So important resistance. I wouldn't be surprised to see that at all. And then, yeah, I like this to keep going higher. I don't see, I think we've made a 5 waves here, arguably. Look, 1, 2, 3, 4, 5, 3 waves back. Looking for new highs, to be honest, in this ASX. I think potentially this correction is over. Let's see, it could all be just, you know, one big topping pattern until we break out. But for now, short term anyway, I think higher before lower. And this is a better looking chart than some of the others in terms of topping patterns. Okay. So important resistance up here at 73 around these previous highs, which are 73.74, and important support at 72.99. If everything else has a pullback, this is where I'm expecting it to come back to. Only underneath this 61.8 level, which would make it a messy correction, would send us down to this 50% pivot level. Really important pivot level, 72.09. That would point to a bigger correction. These lows, this high gap low, and the 4-hour 50 moving average. So that's how I'm seeing it at the moment. Okay. Let's take a peek at the dollar next, because we have not broken down. So although everything else has had a bit of a move, and we've, to be honest, had a nice breakout in silver potentially, we are holding this support level. We're underneath the 4-hour moving averages, and if we look at this on the daily, you can see so far little inside bar trading very quietly. This is a bearish inside bar, but only if we break the lows, and we are not at the moment. We seem to be, with these tails, holding the lows. So sideways consolidation, I would not be surprised at all after a sharp dip to see a three-wave correction here before we go any lower like this, and potentially we continue lower, and then I'm still looking for another leg higher in this dollar index. I could be wrong, I often am. Certainly all we've got at the moment that we can divine from these moving averages is sideways price action in the dollar. So important support 102.04. If we look at it in the euro, we are holding above what a pretty good support level and a fib level, and haven't reached the next one higher. Let me tell you what I mean. Here on the 4 hour, so the favorite fib of the euro is the 786, and if we take a look at this most recent three-wave move lower, we have not reached our 786 fib level, so room to go higher here to 1.09. And only if we break back underneath this 61.8 level have we got a toppy reversal going on, and will then look lower to this 50% level. So we're going to say key support. Let's put the figures on the right so we can see them. Key support is 1.0918, and underneath it we drop down to 1.0901. And maybe we do that whole bigger 61.8, 38.2 thing, but because these 4 hour moving averages are here, I think that's less likely. It does look a little bit toppy, and if we look at it on the hourly, you can see it does look a little bit sideways here, but I can easily see this. This is the favorite fib, and then if we come back and lose the support level in volatility, we're going to see this. Okay, so key resistance and a level to watch for a counter trend sell 109, and then to buy it back 1.088. That's how I'm seeing the euro today. Okay, I still like the pound to go higher. I think that the dollar Canadian is likely to go higher. I still like this pound. Doesn't quite look like a false breakout yet. In other words, it's holding the back test, but I'm open to the pound being wrong and another leg lower before we go higher. If we were to do another leg lower, this is a daily chart. I'm going to go from here to here. I think underneath this 236 fib would call it a false breakout for me. So that becomes really, really important support on the close. 1.2355. Underneath there, this is not the breakout I thought. It's more likely to be an expanding wedge or something like that, and still toppy. So key support 1.2355 for me in the pound if the dollar has a move higher, and potentially we could go all the way back to the bottom of this wedge if that happens. I am still waiting for this wave 4 to be finished, and then we continue higher. Yeah, so let's take a look at the Canadian dollar, because if they don't hike and the dollar continues to go higher, potentially we're on interesting support for at least a little another bounce leg. So what I mean by that, I mean that corrections, you know, clearly we're in a downtrend. Clearly we're underneath important moving averages. We've got a bearish cross here. But the bearish cross is not when you sell, it's when you retest those moving averages. So I feel like this is a swing. This was a 3-wave move lower short term. If we look at it on the hourly, you can see it looks like a really good 3-wave lower, doesn't it? Not quite equal, but pretty close. And so if this is our first swing higher, I would expect this in the Canadian dollar today. So 1, 2, 3. Now we might just go 61.8 and retest these highs. We might go all the way to that equal measured move level, but it's looking pretty well supported and bouncy here in the dollar Canadian. In the Canadian, it's going to be all about the comments, you know, whether they are going to stay on pause or whether they're concerned about inflation or so on. Okay, so the exciting news today, apart from, I think I talked about sugar before, but the important news today is potentially this is a breakout in silver. Here's this channel that we're in. Here's this 886 level, 24.93 I had as key. Now, it's possible, if the market is looking at this, that we have just reached that 61.8 level. So we don't want to come back too far if that's the case. And what do I mean by too far? I'm going to put my support in from this. So here's 25.33 is key resistance that we need to push through or push above, and key support is 24.93. That's what I'm looking at for this to be a breakout that you can buy. This has been really nice moves in silver, but those are the two key levels. If we look at it on the hourly, you can see this is what I'm looking at. So basically we want this low to hold, don't we? So 24.93, a three-wave correction back to that and then a turn higher would be quite interesting, wouldn't it? Now then you would buy it here when it got bullish, and you'd be looking for this to break out and keep going, 25.87, and then retest to the highs. If we don't, if we get underneath here and it becomes resistance, obviously that was a false breakout for silver. Now, we haven't made new highs or in gold, and we've done a 786 thing, and they are quite linked. I think silver's outperforming, but here, this is an hourly chart of gold, high to low. We said 2021 was key. We needed to get above that if we were going to keep going, because that was the equal measured move from the low on Monday, one ABC. And unfortunately, we've reversed that. Top of the channel, equal measured move, 786 fib. When you reverse it as 786 fib, if you continue underneath the 61.8, which we've done, it is bearish, and we're going to look all the way down here towards 19, another leg swing lower, and we're going to measure our next swing lower for our target. So if we measure from this high to this low, project it from here, our first target here is down here at 1989, and potentially we do a bigger correction, maybe 1970, maybe 1956 in gold. So this ABC correction and a lower high means headed lower in gold. If you're waiting to buy, you have to wait, and if you are looking for something to sell, this is not a terrible idea short-term trading today. Let's take a look at oil, because we're still stuck in a pretty sideways range. I'm still pretty bullish oil, but we're looking a little bit toppy, aren't we? Double toppy sideways range here on the daily. Since the news of those production cuts, we have got 1, 2, 3, 4, 5, 6, 7. This is the 8th day in this sideways range. Important resistance as well, just above us around 82, and important support at 79. So if you are short-term trading in this range, let's look at how we're counting this correction. So it's possible this is a triangle, in which case the bottom trend line, look for a third touch false break here. That's one way to look at this. So if we reverse here, bottom of the range, hourly 200 moving average would be our target. But I think it's possible that we've had one swing lower. We've gone A, B, C. And so we're going to look for another full swing equal to this one. So then we can put our levels in. 80, round number 80, 10, and then second target, actually, if we do the bottom of the range, and oil does love to range, is 79.06. So if you're short-term trading oil, I think lower before higher in this one as well to complete this correction. So 80.10 and then 79.06. Okay, so let's take a look before we go at Bitcoin and Bitcoin futures and then ETH. So in Bitcoin futures, here's our lovely breakout. Everything looks amazing. I really do think that if we look here, especially at these lows, you know, there's so many wicks in this gap and this sideways range that, God, what's not to love about this, really? Now, imagine, though, that I've got it wrong about being so bullish. And imagine that this is a wave 1, wave 2, this is wave 3, even though they're equal, and we're in a wave 4. Well, if that's the case, let's hide a few of these. Let's just play what if I'm wrong, which is what it's always good to do. So this is 1, 2, 3. And we should actually be looking at the fib levels of this wave 3, the 38.2, but more importantly, the 50%. Because remember, the 50% of the most recent swing very often is a tricky level. So if we were to say what's going to be our next tricky level on the upside in Bitcoin, it's going to be 50% of this last swing lower, which is a pretty funky 5 waves, but it is. Well, it's very funky if it is, but it's also pretty important support and resistance if we look left here, especially at these weekly closing lows. So we can make an argument. There's the lowest closing low. And if we look here, what was the lowest? There, that's not the low, that's the lowest closing low. 31,900. So the next upside level, and let's also then say, what if I've got this wrong and this is not 5 waves, but this is, you know, A, B, C. Let's measure 1. That would be that, that would be that. Yeah. So if we've gone beyond the equal measured move, look, I think this is a funky then correction in the middle. This all adds up to the next upside resistance zone level to watch out for in Bitcoin. And if you really want to sell it, and I see people, you know, I'm still holding my short, they'll say on Twitter, like, I'm thinking, why this is such a nice uptrend, why are you keep shorting it? But anyway, if you really were wanting to do, you know, and this is one of those scalper levels, so you know how scalpers will leave big orders at big levels just looking for a small move. This is one of those levels, 31,600, 31,700. Let's do that in the spot and make sure that they line up. Okay, I'm going to hide this fib and we're going to take that away. Okay, and we're going to move this one lower and say, what if this is 1, 2, 3 and we're just in a wave 4? Where's our 50% level? 31,848, and look, bang on those lows. So if you really want to sell Bitcoin, I don't, but if you really did want to sell it, look how it lines up with those weekly closing lows there. 31,848 really is the level that we should be looking at if you really do. And would that line up with a kind of funky, maybe, let's see, 1272, yeah, it kind of would. So if this was 1, 2, anyway, that's what I'm looking at for Bitcoin. So tonight, obviously, we've got ETH, we've got the Shanghai Capella upgrade. Let's take a look at this on the daily. I'm not super bearish, but I do think that we could see a pullback here. And I think it could be a nice buying opportunity. if, as I said before, if we can close above 1912, the target for ETH is 3030. I was really shocked by how many of the holders of ETH who are staked are offside from the price that they bought it at. That says to me, you know, most people who are offside, they don't rush to sell. They wait, especially if everything is going up. They will wait. You know, it will give us quite nasty selling pressure later on when it does get back to the level. But yeah, I you know, holding above all of these weekly moving averages means I don't think we'll see big pullbacks, but we could see a pullback. I could be wrong. This could just be a big corrective move, and you know, we do another leg lower from here. But I think at the moment we're not finished going up, and pullbacks will be nice buying opportunities. Okay, now if you really wanted to do the selling, let's look at this the same way we looked at Bitcoin. So let's hide this and say we've gone 1, 2, 3. 50% of this swing is likely to be a bit of a tricky level. Here we are sideways at the 38.2. So I think if we were to pop above it, then 2230. Is there any other structure here? I suppose we could argue that these lows are around here. So if we continue higher, 2230 would be my target. Does that line up with an equal measured move from the lows? Exactly. So if I was looking for where did I really want to sell ETH, if I really wanted to sell it, it's going to be 2230. So I'm not in favor of selling here, but that for me is a massive level to look at selling. Okay, I hope that's useful today. Trade carefully. It could be one of those funky days.